can speak and sort of looks like to us reason, and you can converse with, and you can ask them to do things. Now, with crypto, you can give them a wallet, and they can control that wallet, and then they now have access to pay and buy things, which you couldn't give a PayPal account to a bot, right? I mean, that's people are shaking at their knees, right? But you can create a bot that does chores and pays your bills, kind of thing. That's where we're going. And these bots are becoming. There's things called swarms where you have a few bots that work together. Some are good at talking, some are good at image generation, some are good at sort of finding information. And these entities now have the ability to pay for things, so they can go pay humans to work for them. And so it just having crypto rails and the ability to transact without any intermediary is like the product market fit for these AI bots, because
Now,
now
are you saying we're there now, or is this 5 years down the road? Or
we're there now. The in the last couple of weeks, one AI bot, and they usually talk on like X, but one AI bot asked another AI bot to create them a picture and then pay them for it. So
hey, everybody, welcome to Markets and Madness, the YouTube channel. We have a special guest with us today. Alex Chehade is an old and dear friend. We probably go back 10, 12 years, maybe more. First person I ever spoke to about Bitcoin. And as he just reminded me, I used to tease him about it all the time. But Alex, I'll let you introduce yourself and tell us what you've been doing.
yeah, fantastic. And thanks for having me. So I was a physics grad, moved into finance because I was in London, and that's the main draw. And I originally started trading interest rates, short-term interest rates, so Euribor, short sterling, and euro dollars. Eventually, well, as a market maker to start with, then started trading proprietary, and then we looked at other asset classes. I went down to Cape Town, traded from an arcade down there. And then that was the time we were in Cape Town, credit crisis happened, and market madness indeed. And we sat on our hands, and we were, I guess, I was late 20s at the time, and sort of flabbergasted that no one knew what was going on. Big institutions were failing. And then swiftly after that, that's when Bitcoin came out, right? And so, you know, uh, being youngish at the time, we looked at it. Unfortunately for myself, I was in a pretty good situation. So, I wasn't in a place like Argentina or Lebanon or places where, you have problems with currency. So, I bought a bit, but not, I didn't go all in.
Right.
But yeah, as you say, then started trading and setting up FX shops. So I got from the sort of front office side to more of the middle office and back office side. And then 2016, I left the FX business and went straight into crypto. Spent about a year sort of learning more about it and sort of finding out it was a big time in the market where it was very expansive. The market dynamics were changing, and then obviously I think the futures came out. Uh, Set up an exchange in Abu Dhabi, actually a multilateral trading facility for crypto and custodian. And that was in ADGM. And Richard Teng, who's the CEO of Binance, used to be the CEO of that authority. When he moved to Binance, he grabbed some people that he knew and trusted. I was one of them. And yeah, so dragged me in. I set up the Dubai exchange. So it's a crypto exchange with probably the most regulatory permissions out of any crypto VASP in the world. I did that up until the summer. Now I've taken some time out and looking to next steps. Still actively involved in the markets, both the traditional and crypto.
Thank you. Yeah, I mean, I remember we first spoke about it when the Cypriot banks imposed that 50% haircut, if you had money in the bank. And we were on the phone. I guess you were in London at the time, maybe at Trade Next. And,
Yeah.
and I said, if you're ever fearful of the banking industry and if Bitcoin's ever going to take off, this is the time. If banks can impose that type of haircut, and you said, "Yeah, I just bought a couple,"
Mm.
and it was like $400 a coin or $600 a coin or something like that.
Yeah,
Yeah.
I mean, it's. I guess the problem is it's still a bit inconvenient. It's not that easy, right? You know, wallets are difficult. Just the user experience isn't great, and so until that user experience is better, unless you have a real driver, right? Unless, like I say, there's like really economic sanctions or some sort of real driver to move people to into crypto, it's difficult. So unless you have that complexity and that ability to do it, it's still tough. I think we'll get there soon, and this is what's happened with the ETFs, right? So BlackRock and all the other ETFs allows, and it's been more retail still or individuals buying this, but you know from your IB account or whichever account you have, it's much easier to enter the market rather than going to sort of a foreign platform or like just an unfamiliar place. So yeah, we need to break down those barriers.
You could be at a point where the tail wags the dog, where these ETFs will drive um, the action. Because first of all, they're better leveraged. You have access to leverage that you might not have on an exchange, although that's a whole regulated issue. I have a couple of questions, Alex,
Go
for
ahead.
you. Very simplistically, many years ago, I got involved with building a trading system, and it was a matching system for the money markets. And one of the issues we had to confront early was whether or not we had a central box to match, which involved time delays from the various places, or you had a distributed match where the match would take place at a local site, and there were problems with that as well. This strikes me as the core. I don't know if I've lost anybody here, but this strikes me as the core of the blockchain technology, where you have this distributed match taking place to record transactions. As I understand it as a layman, isn't that at the heart of the blockchain technology? The fact that the ledgers are being uh, dis- uh, moved in, taking place on various sites, so that there's backup records of the actual transaction. Is that fair to say?
Yeah, so I think the first concept we look at, right, is we where you have dual ledger and dual ledger accounting. So like if you stand back, I think a few people conceptualize blockchain as like triple ledger. So the individuals have one, and then the third is the distributed ledger, which is kept by nodes all around the world. So that's an easy way. So you know you have peer to peer, but it's validated by that third distributed non-custodial ledger. So that's how blockchain works. But you know, just talking about your problem now, this is what other people are trying to solve in blockchain. So, firstly, to have that external counterpart or that external ledger to validate transactions, that's still either a sort of relatively centralized point, or if it's completely decentralized, that information has to propagate to all or at least the majority of those nodes, those points, in order for it to sort of be validated. Now, that's again like slow, as you say, because that the latency of that decision has to go across the whole network, and so and as it gets validated, it's even slower than the actual transmission. So some blockchains are now doing sort of localized finality, and so they finalize by looking at like time sequence and other things, and then they get like further finalized later down there. So you have that sort of that localized action. So the person trades locally, but then it gets finalized in the sort of this third ledger.
And
But
is
yeah,
that
I
all
mean,
done within milliseconds?
yeah, so there's a couple of blockchains that are fighting for that sort of superiority of speed. As we know, Bitcoin blockchain speeds are slow, or even slow in
So,
soon, but like
so if I
this
could,
ones are not.
so I could just interject here for anybody who's looking and may have been a little confused by the conversation. We're having two conversations here. one about cryptocurrencies, and another about blockchain, which is the fundamental source of the Bitcoin. And when I looked at blockchain as a technology, I sort of looked at Bitcoin or cryptocurrencies as an adjunct to blockchain, blockchain being the central core of the issue. And where I came out was that blockchain has much better uses for things like mortgage markets in third world countries, where you can bribe an official and steal somebody's land by bribing a judge, as opposed to putting the deed through a blockchain, where you've got all these segregated
Checks and balances throughout, right?
exactly. So as opposed to a crypto, which, as I understand it, is simply a recording of a debt from one individual or one entity to another, being a distributed match, so it's verifiable. And that's a use, as opposed to, say, treasury debt, which everybody sees as visible, but it's kept on two places. So blockchain is really, to put it another way, a process whereby you can actually defeat thieves of transactional thieves that steal evidence of a transaction. Is that fair to say? Is that a layman's way to look at it?
Yeah, it also enables sort of peer-to-peer transactions. So this is and so peer-to-peer could be individual to individual, or it could be entity to entity. And so this is another. So if you think about margin calls, right? And we used to go through, and you have to like call somebody up, and they have to send you a picture of a bank transfer, and then your risk department decides whether they're going to accept that or not, right? And but with crypto now, the entity can top up their account with like a stable token or collateral token, right? So they actually tokenize money market funds, so you can actually have your collateral yielding, and then you can top up, and that's instantaneous from like institution to institution. And so I think it should increase the fluidity of financial markets, make it easier to transact. It should de-risk some of the markets, because you don't have that issue of sort of a long transaction time for sort of bank and
Settlement time.
cross-border settlement. So
Very
I
good
think
point. Yeah.
within borders now, I think it's getting quicker and quicker with Fedwire and similar SEPA in Europe. But there's always cross-border. There's always hurdles to overcome, and if you can move assets or value very much instantaneously, and know it arrives and not have any doubt, then that's only beneficial, right?
That's a very good point. As we move into, you take the BRICS currencies, or the BRICS members are have built their own SWIFT and their own chips,
Settlement systems.
settlements. You're saying that crypto can replace all of that?
Yeah, I mean, the BRICS are definitely looking at blockchain for that settlement. I mean, not to get too political, but with the conflict in Ukraine and Russia, and this US turning SWIFT off, everyone realizes that, okay, that's like you were saying earlier, Fred, with the banks. That's another tipping point where you're like, okay, well, I'm not in control of this giant settlement system, so we need at least a backup, and that's super fair. Like, no one wants a single point of failure on something so critical, right? So this is another great way of allowing people to do that.
Another question I had is, do you see? I'm sorry, Freddie. Did
No,
you
no,
want to
go
say
ahead.
something?
Go ahead.
Another question I had is, do you see the AI and quantum computers as a threat to
Breaking the
crypto
chain.
in two directions. One, I would think that mining would be a much quicker and easier process with something like a quantum computer or even AI. Do you see that representing a threat to the crypto side of it?
So there's two or three quantum resistant blockchains already. These are quantum safe cryptography. And just to sort of, I guess, most most of the internet and everything else is secured on public-private key passwords, right? So it means you can sign transactions with your private key and encrypt. And so the blockchain's done on a similar thing, and the technology is called, or the internet is built on RSA, and elliptic curves is what crypto is built on, but same principle. And so with quantum computing, there's an ability to factor these prime numbers and work out what the private key is in a much shorter amount of time. And so we're moving closer to being able to do that. So on a side note, like governments are downloading data that's now encrypted because they're like, well, if we can decrypt this in 3 or 4 years' time, it's some of this data is still going to be valuable, right? So it's a sort of long-term spying.
Oh,
People are doing that. So it's not just crypto. So yeah, being mindful of that, I think everyone's looking at new mechanisms for signing. And with AI, I mean, in the last couple of weeks, AI and crypto has gone absolutely bonkers. And, there's a few key things here which, you can sit back and think. The first key thing is, you have these large language models that, can speak and sort of looks like to us reason, and you can converse with and you can ask them to do things. Now, with crypto, you can give them a wallet and they can control that wallet. And then they now have access to pay and buy things, which you couldn't give a PayPal account to a bot, right? I mean, that's people are shaking at the knees, right? But you can create a bot that does chores and pays your bills, kind of thing. That's where we're going. And these bots are becoming there's like there's things called swarms where you have a few bots that work together. Some are good at talking, some are good at image generation, some are good at sort of finding information. And these entities now have the ability to pay for things, so they can go pay humans to work for them. And so it just having crypto rails and the ability to transact without any intermediary is like the product market fit for these AI bots, because
now
now
are you saying we're there now, or is this 5 years down the road? Or
we're there now. In the last couple of weeks, one AI bot, and they usually talk on like X, but one AI bot asked another AI bot to create them a picture and then pay them for it. So it's we're still a little bit away from sort of I don't know breakpoint, but it's really accelerating. So crypto and AI is a very good combination. And then going back to some of the things Tim said, like with the blockchain, you can verify things as well. So it's this is one of the things that can police bots, because you can start verifying what they're doing and saying, and put their transactions on the blockchain, so it's a little bit easier to police. So yeah, these two things, quantum and AI, is really accelerating everything for crypto,
so it's not going to inhibit it; it's going to accelerate it.
for sure.
Yeah.
Oh,
Now,
we're in future. I'm in future shock right now.
yeah,
I mean,
yeah, that a bot can
as
talk
an
to another
organism,
bot
as a
and pay
human
him.
organism, trying to adapt to this super speed of these computers dealing with one another and trying to screw one another. This is this is really we are now beyond I think human capacity to put their arms around where
I'll,
we're
t-
going. Much not even where we're going, where we are at this point.
Yeah.
I'll tell you a great anecdote. I was on a panel last year, and it was about governance and risk. And there was a lawyer who worked for a big US law firm, And we brought this up in the panel, but we also brought it up in the beforehand because we were talking about sort of the future state of things. And there was a trading desk, I think in Hong Kong, that trained the AI model. This was maybe 3 years ago, 4 years ago. They trained an AI model to trade for them, right? So they put in their parameters and they said, like, these are the things we want to do. And they let it go, and it was trading. They were happy with the process, and they got a call from the regulator, and they were like, "One of your traders is doing spoofing and layering," and everyone was shocked. They went back to look. They got sent the trading records and everything else, and they realized it was one of these bots, and what had happened because that you just let it, you don't code what it does, it codes itself, right? It learns, and the bot had managed to understand that the best way to get the best execution was to manipulate the market. So if it wants to it wants to sell something, it would just bid up the market and make it look like it's going up, sell what it wanted. And the lawyer was saying it was lucky enough that it was, I guess, early enough that the regulators laughed about it, and everyone, and they're like, well, obviously you need to stop this, and they did, and put more guardrails in. But yeah, the bot learned to do layering and spoofing because they're like, that's the easiest way to get your fills.
I predict that we will have a bot in jail soon, and another bot will sexually abuse the first bot in jail. We'll be reading about this, this locally.
On another topic, we've seen Bitcoin rally up above 100,000. That's been a target for many years, and we've reached there. Do you see that that move up as a factor of potential, as a factor of inflation, as a factor of a new Trump presidency and his acceptance of the digital world? Where do you see that all coming from and going to, basically?
Yeah, I mean, you've got to think that there's just going to be a lot more positive trajectory. I mean, you'd be a brave man to be short in the market. Uh,
Can you be short in the market now? Like, is the borrowing cost? You mean the borrowing costs are there? Are they that expensive?
Uh, I last time I looked at one of the markets, it charges you about, well, it's quite expensive. It charges you about 30% APY to hold a position for a year. So
Now, to be short, what exactly? Bitcoin or
that's
crypto?
some of the tier. Like I was looking across like the top 3 or 4 cryptos. That's the sort
But
of
it's easier to short the ETF or buy the puts on the ETF.
yeah. I mean, I'd have to have a look at what sort of activity is done on that, but definitely for the sort of the futures markets, uh, it's tough. But people are putting that basis trade on for sure. But yeah, with President Trump coming in, there's definitely a lot of hope. Um, I'm in a few sort of groups with sort of crypto OGs, and a lot of those guys are in the US, and they're ecstatic. Regardless of like political bias, it's there's been breaks on the industry for them for forever, but like in the last sort of presidency and maybe the one before as well, it wasn't great, and so you've now got the US superpower lifting the foot off the brakes, right? So that's a big acceleration. And then the geopolitics as well, as you said, BRICS, Russia, Ukraine. Everyone wants to have at least some sort of protectionism or isolation from the markets. Whether whether Bitcoin performs that well in major risk events is still yet to be seen. It usually actually there's still a bigger flight to quality for US dollar than Bitcoin. But as more and more people use Bitcoin, or it becomes more ubiquitous globally, I would expect you find that's the flight to quality, right? Because
Digital gold.
Yeah, so it's so portable, right? It's on your
I,
phone, anywhere.
I was talking to a hedge fund manager. I guess it was about 5 years ago, and at the time, Bitcoin was it 20,000, something like that, 20, 30,000, and gold was 1,500, and he was comparing stores of value, and he says if you think gold is a store of value, it's got $1,500 an ounce. If you think Bitcoin is a similar store of value, is that worth 10 times, 20 times more? If you're just looking at store of value. And now we're at the point where it's 50 times more, right? Or thereabouts, 45 times more. And is that just the potential of what the next step is?
I mean, the next step is probably another 10x, right? $1 million shouldn't be difficult. Um, like we look at the total market cap of what gold is compared to Bitcoin, you see that, and then you haven't seen this so much, but with the other cryptos, there's more of like an additional ecosystem, right? A lot of the BlackRock stuff is done on Ethereum, right? So you can create tokens on Ethereum. This sort of hasn't happened on Bitcoin. So Bitcoin has a lot of room to grow with the utility. I know there's a lot of it's sort of people want to leave it alone because it's the original. It wasn't built for that, but because it's a programmable, you can upgrade it and you can improve it. And so nothing's set in stone with this stuff. So I think there's a lot of room to grow.
I'm an old dinosaur, and I was a currency trader under Bretton Woods. I actually traded foreign exchange under Bretton Woods, and I watched Nixon close the gold window, and I watched Bretton Woods collapse, and I saw when the dollar was in crisis. I'm talking about major crisis now, the late '70s. Things like creating well, look what the French did. The French said, we are no longer going to permit transactions to take place under the franc. We will have a financial franc and a convertible franc. And the Swiss imposed negative interest so that if you did a rollover trade backwards, you actually had to pay negative interest on the surplus balance and overdraft interest on the short. And the Bank of England had corset regulations, and you had these currencies all throughout the world, the peseta, the Belgian franc, they all split their values. So to think crazy like that, I mean, these were crazy times. And I've always felt that a currency, particularly a blockchain currency, is all about validating a transaction between entities. I mean, that's really what it is. If I do a trade with you and we decide to settle in some monetary unit, be it crypto or conventional, that contract is at the source of the transaction. And we rely on a legal system to enforce that contract. So let's get crazy. Let's say that the Chinese or some governmental agency decides for whatever reason that it will no longer permit its legal system to enforce contracts that are done with a crypto. Your contract is effectively null and void. There's still a crypto debt someplace that needs to be settled, but you have the sovereign risk within that government. Now, admittedly, this is a crazy scenario, but I've witnessed enough crazy scenarios in my life to know that governments do this. And I'm raising something that's not really insane. We could see that. Where do you think crypto stands in the midst of something like that, if you can see that as a fair question?
Um, well, I can see. So the governments have tried to ban crypto. So firstly, crypto is retail led, right? I think that's slowly changing now, but this is the other difference between traditional markets and crypto markets, right? It was all retail led. It's set up. It's by the people, like for the people, right? And so for to get this sort of like top down sort of ruling just is very difficult to enforce. It obviously will be validated by institutions that are much more culpable, but individuals, it's hard to affect them. There's still a lot of crypto trading in China, and there has been, regardless of bans. So I don't think the governments would be as naive to try that. I mean, obviously, like we say, everyone's crazy someday, so like it could
It's
happen.
equivalent to a default, though. I mean,
Yeah,
you could see some government that has a major position at settling crypto decide that it's going to default. It's not going to settle.
yeah,
It won't settle in dollars. It won't settle in crypto. It won't settle in gold. It simply defaults. We've seen that, particularly in the third world,
yeah,
over the
much,
years.
yeah.
So a crypto default would be a major event.
Yeah, I mean, I think we, we've seen we've seen sort of defaults from sort of closed loop scenarios so far. Like there's a famous one that happened in the sort of I think 2021 with not the ETF but a similar product. It was like a trust product where people were borrowing, putting money into a Bitcoin trust and borrowing against it, and this was one of the market factors that caused the big bear market in early 2020 2021. But I think luckily crypto is very quick to learn. I mean, the market's moving so quickly.
Very
There
good
would just
point.
be a rebound, right? It's like one of those things that's very accelerated by tech. It's super funny that it's also led by computer science guys, not finance guys. Again, which makes it different. And then again, like
That's
Fred, I
true.
remember sitting at like a crypto conference and someone explaining to me, and obviously he's a computer science guy, this great concept, and he's like, we should do like, we're worried about prices, and we should create this concept. And I was like, yeah, they're called options, and they've existed for a long time. You just don't know about them. They're about 500 years old actually, but you just didn't study them at high school or in your undergrad. So, I mean, good idea, but you're not the first.
Right.
And so that works as a double-edged sword, right? So some things that we have solved in traditional markets, and the crypto market didn't need to make those sort of mistakes, but have. But there's
You
other
know,
things where we're re-looking at ideas and maybe finding a different solution that works, right? So it's really good.
one of the one of the things that you may be too young to remember, certainly have experienced, was something called the Herstad risk. Are you familiar with that?
No.
Herstad was a private bank in Germany. Now I'm going back to sort of 1974, and what the bank was ready to go under. So what they did was they bought German marks against dollars. There was no euro at the time; it was a German mark. And because of the daylight risk, the marks came in to Herstad's account in Germany in the U.S. morning, maybe 3 a.m., and the U.S. wasn't open yet. And Herstad closed their doors between 3 a.m. and sort of 7 a.m., New York time, and didn't pay out the dollars. They just kept the marks. Now, that got resolved, but it took almost 10 years for all of it to get resolved because the legal system hasn't caught up with the financial system at that time. And it strikes me now that our legal system is so far behind the technological advances that we've made that something like this could happen and stall markets for 3 years or 4 years, realistically. And I see that as a very real risk. And maybe it's not. Maybe crypto has overtaken that. They've certainly overtaken the daylight risk. We've created collateral systems and so forth to deal with the daylight risk. So the foreign exchange markets addressed this probably 10 years ago, 15 years ago. But I wonder if the crypto markets are vulnerable to a similar kind of problem.
Well, much to my wife's disgust, the crypto markets are 24/7, 7 days a week.
That's
So like even worse than the FX markets. But yeah, so we talked about the sort of peer-to-peer settlement. The and you talked about this, like property rights. This is something that, the crossover from the digital to physical world is something that needs to be addressed. And so and this is a narrative that happened in 2024, and I expect to progress in 2025. They call RWAs, real world assets on chain. Now, where it's a money market fund, it's very easy to verify, right? It gets issued by a sort of trusted entity, which is the issuer, like BlackRock or whoever wants to do it. And you can see that token is issued by them, and then the AI bots can trade that as much as they want. And that is a physical representation of something is real. And whoever has the ability to cash that or exchange that back at the issuer and take cash, it's fine. So probably it wouldn't be a bot that would be allowed, but like an entity. So the bot would then exchange it with an entity, and the entity can cash it out. Now, it's for property. I mean, you can create a similar sort of token or a similar sort of IOU or a similar sort of contract and exchange that, but it's at that point, and that value can either be held by sort of market makers, market price. But this is the thing that regulators are concerned with at the moment for RWA. So if you tokenize a building, you tokenize property, you divide up a condo into sort of 1,000 pieces. It's that secondary market that they're worried about for sort of end consumers, because you can start transacting that for a very inflated price, or nothing, right? And so are consumers and people sophisticated enough to always know that they're transacting at a fair value? Now, this is something that for normal financial markets, right? When you have an experienced counterparty or an institution, that's their job, right? You don't need to protect them. But anyone below that, there needs to be this sort of protection, and that has not been built into crypto. And so this is, again, the nuts and bolts are exposed in crypto. It's still an experiment at this phase, and this is a problem for everybody.
But what you're saying, if you have this condo and you break it up into 1,000 different parcels, let's say it was, $100,000, so each one of these parcels is worth $100, and
Yeah.
somebody wants to sell it for $1 million. You're saying there's no checks and balances there?
Correct, correct. I mean, depends on how you would do it. So, I mean, they're starting to get like real world asset exchanges, but these are still peer to peer. So, I could buy 60% of these condo tokens, and sort of like quarter the market, right? And do you get fair value there? And then again, if you are just transacting peer to peer, again, I guess the analogous to this is like classifieds, right? You go buy something from a person. It's not like you have a shop or an institution to validate that price. You just have to take it at face value, right? And so these are the sorts of things that we're trying to conquer, or at least improve, for anything.
What, one other question, actually two other questions I have, and I know we've taken up a lot of your time, and I really appreciate it. I think it's been informative. But you mentioned earlier that Ethereum was built more to facilitate this. Do you see the price of Ethereum overtaking the price of Bitcoin because of that?
So this is long talked about, called the flippening, where like I don't see that. So Ethereum is like compute, so that it's like computation on the blockchain. So it allows you to create conditions to transact. So the prediction markets, for example, sort of built on these sorts of mechanisms, but I you know I think it's too insurmountable for that to flip. I think there's a lot of utility, and the Bitcoin's beauty was in it being first, and so there's they managed to do things that you just couldn't do, right? Like the Satoshi mined tons of Bitcoin, and then that's all sort of stored away, and then it organically grew. So it's a bit difficult to get that sort of opportunity now. But what it isn't so difficult is to create a new blockchain with compute on. Right, so Ethereum is the market leader, and it's sort of got king of the hill, and it's got a moat of a lot of developers, but it's just not as substantive a moat. Like you have things like Solana, which people talk about, and this one was the one that was supposed to be developed to become a decentralized stock exchange. So it was built by some Qualcomm engineers, and all they're looking at is speed of light latency, and that's what they want to sort of get to that point, and then they'll feel pretty happy about themselves. But there's other ones like Avalanche and all these new instances of blockchain, and like Tim says, you can see the beauty and the ease and the utility of blockchain. And so, like, yeah, Avalanche allows you to create your own sort of like localized blockchain, right? Your JP Morgan blockchain, your BlackRock blockchain, and then you can have quick payments, faster payments, instant payments, cheaper payments, all within your environment. And so we'll get there. It's, as I say, it's an experiment that's public and in the wild. And so, for good or bad, this is what you see with the products, right? You don't see this on other financial products or many other products, right? Usually, there's like an incubation period that's done in private, and then sort of like a sandboxing and a test. These things go out into the wild like straight away. And with the power of the internet and the proliferation of X and other social platforms, they reach billions instantly. I mean, crypto isn't quite at that point. I think there's like a coming up to a billion users, but it's,
Wow.
I mean, it's there. I think it's 900 million users. So a long way to go. But going back to the AI thing, that just means that you can have a smart fridge that can start buying your groceries for you.
Let me ask you just one last question for me anyway. If somebody just reached in and said, "Okay, you're my new trader. You don't have a position. Where would you go? What's the available position now that's worth taking?"
So now you have before everything was very correlated. A couple of years ago, you could just buy Bitcoin, Ethereum, or one of the other top tokens. Didn't really make too much difference. But now you have the ability to buy these tokens that are a little bit more sectorized, or well, that's not a real word, but you know, they have different attributes, right? So again, you can buy AI tokens. So for sure, you should buy like each sector. We have a thing called DePIN, so decentralized physical infrastructure. So this is like sharing Wi-Fi, sharing phones. So you want to just, much like the financial markets, and Warren Buffett says, sector baskets, make sure you have exposure across, weight yourself more heavily towards the top of the curve, like on the sort of trusted platforms, and then hope that your outliers and your smaller picks outperform. For me, I mean, I have a bit of Bitcoin for sort of my protectionism. I think that's my lowest risk product, and then I have some Ethereum, Solana, Avalanche. And then, yeah, as I said, at the moment I'm looking at these sort of the new physical infrastructure tokens and AI tokens for sure. I mean, the AI market is going bonkers in real life, right? Nvidia is incredible. The returns you get from these stocks are crypto-esque. And you look at the sort of recomposition of the stock markets. Before in the 90s, completely different to now, and you think it's going to be another revolution.
And are these sector tokens available on like Binance and Coinbase and
No, they're not. Sadly, someone that did used to do this kind of thing was FTX. That
okay.
was that was one of their better things. The on the crypto exchanges that they do now have, and some of the information sites like CoinMarketCap and CoinGecko, they're starting to do sectors and show you the sectors, but the baskets are yet to come. I think there's a bit of cost, right? So in traditional markets, people do this, but in crypto, you can just buy these yourself and not pay any kind of fee because you can buy them direct, right? There's no need to have brokerage accounts and custodians and everything else. So I mean, I feel there should be a need, but it has yet to be fulfilled.
Wow.
Is it safe to keep those tokens on a Binance or a Coinbase or an exchange like that, or do you take everything into a cold wallet?
I have a variety. I'm searching if I have. So I have. There's one of my Binance cold wallets. I have cold wallets, software wallets, exchanges. I mean, for Binance, I help build the wallets for the Dubai exchange. So, I know they're completely segregated and, the security is incredible. I mean, everything's locked down and, there's a zero trust policy. But is that totally foolproof? Probably not. Um, but, if you're relatively safe with one of the big exchanges. So Coinbase for sure safe, Binance for sure safe.
And I know in the U.S. now, PayPal and Venmo are offering like a handful of the top cryptos as well.
Yeah, so PayPal used a technology that we used at Midchains. They bought this provider, and it was a great MPC, so multi-party computation. So what it does, it splits a private key into three different places, so it's never in the same place. It cycles every 30 seconds, and it's relatively that key part is unhackable, but this human intervention or anything else is hackable, and so this is the only risk you have with both centralized exchanges or yourself, right? Like one of my friends had his wallet compromised on his computer the other day. You just again got to be careful. It's early days.
What about USDT? Like, a lot of people use USDT as a funding tool to get around if they can't get to dollars.
Yeah,
If we could speak to that for a minute.
yeah, for sure. I mean, so I know the Tether guys, and they spend a fair amount of time in UAE. They've built quite substantive holdings of US Treasuries. Everyone can see that this is absolutely one of the major use cases for crypto, and so you know, not necessarily people that can't touch USD, but just everyone's familiar with USD, right? And so going back to the developing world, right? Like lots of people don't have bank accounts, right? And lots of people do have mobile phones now, and so you're either seeing payment providers that are cellular, or you can transact USDT, and again, it's pegged to something that everyone can sort of get back and find the value to,
And is
right?
all of that backed by dollars?
Probably. I mean, I would give
Okay.
it very, very, very high certainty. Well, so
Okay.
it definitely is intermittently. The only uncertainty for Tether is they only publish their thing once a month. So there could be a break between that. But at the moment, they publish it once a month, and they're 100% backed by dollar equivalents. But there are other providers, but Tether is the lifeblood and the fluidity of the crypto markets.
Hmm.
The biggest consumers of Tether are market makers, keeping pricing honest between all the exchanges. I mean, there's obviously a use case for payments, but that's the biggest provider.
And one last question. We mentioned earlier the new administration, Trump being a supporter of digital currencies, and I know part of the allure of digital currencies going back 10 years ago was that there was no government intervention. So the fact that governments are accepting, I know in the UAE you've mentioned this a couple of times. I've seen a lot of your posts about the government has been a lot more friendly, probably the most friendly. Is that a is that a good thing, or is there going to be more controls and it's going to put, more, it gives you more security, but it also takes away some of the opportunities? What are your thoughts?
And the risks, and the
Yeah,
risks.
I well, like the analogy I used earlier, I think the brakes have been lifted off, right? So it now allows a lot more development in the North America and the US particularly. I'm not an expert in U.S. politics, but the Republicans are definitely more small government and sort of hands off, and so that fits with it, right? The idea is obviously to increase America's ability to perform, and so this does this, and I guess freedom of capital is also net positive. The risks just the inherent crypto risks, right? It's more difficult to police because it's peer to peer, but it's still on a blockchain, so it's transparent. So you like we say, you can't roll back transactions. If you get hacked, and that's the end of the day. So you're exposing yourself to more of this code is law than the legal framework needs to catch up. But I guess that's probably the biggest risk. And then the outside risk actually is obviously people talk Michael Saylor and MicroStrategy and their stock as a Bitcoin play and the leverage that he's bringing into that product. But yeah, I mean I guess a contagion risk and a centralized and a sort of single point of failure. As I believe they're all custodied at Coinbase, so perhaps they should start looking at other custodians just to de-risk any sort of catastrophe. But for sure, this is the beauty of crypto again. Like Coinbase should, and I'm pretty certain they do, you know, have the ability to redo their wallets in the case of like absolute catastrophe, right? Like whatever, Hurricane. Remember, is it Hurricane Katrina when all the FX went down because all the
Yep.
data centers were flooded, right? So like that kind of thing. Like if the data centers get totally destroyed, there should be redundancy and everything else. So yeah, hopefully we've learned from that.
You know, this has been a fascinating. I'm gonna watch this probably 3 or 4 times
Right.
because it's raised as many questions to me as it's answered. And I really thank you for a stimulating conversation. I can only I just I'm an old world guy and I look at what's happening here, and I see double-edged swords all over the place. I think that the fact that the initial lure of crypto was hiding transactions, which led to terrorist activity, cartel activity, uh, what we used to call the underground economy, is now alive and well and flourishing inside the crypto world. So I do see some responses to ways to track unsavory transactions within the crypto world, and I don't see governments standing by to permit that level of activity to grow and flourish to some extent, and that's I guess a lot of my concerns, and some of my questions have sort of suggested that. So we're in a world now where we more and more transactions or I guess unsavory transactions are are not only permitted but flourish and financed, in fact, by crypto. So we can see government action, particularly in the U.S. I mean, there's this growing on the you raised the Republican side. There's this growing concern about terrorist activity, cross-border activity, um, cartels. We're talking about waging war on cartels, which in fact was done against the Barbary pirates in the 1800s. So you could see Congress actually taking action against financing terrorist activities, which would tarnish a lot of pieces of crypto. So I think that's an under under concern. I think that risk has not really been heading to the fore and could show up on a given afternoon. Somebody raises a point in Congress, and all of a sudden the markets could be all over that. So I think, as I said, there's more questions raised than answers here. But this was fascinating. I want to thank you for taking your time out for this. It was really worthwhile.
Yeah, Alex, would love to have you on again. I know we could do this for another hour. It really has been fascinating. You are in the UAE now, right?
Yeah, yeah,
You're
we
in
know.
Dubai,
Abu Dhabi.
Abu Dhabi. Okay,
Yeah.
that's great.
Well, if you get to Florida, let me know, and you can have
Yeah,
a dinner someplace.
Oh, for sure I will.
yeah. Well, thanks again. Hope you guys found this informative, the viewers out there. But I certainly have, and I know Tim has expressed his comments as well. Alex, thanks again. I do appreciate it. I would just ask you to hang on for 1 second.
Thanks.